In this example, we are looking at how a stock split affects the stockholders' equity section of the balance sheet. We have Illinois Corporation currently has 500,000 shares of $1 par value common stock authorized with 200,000 shares outstanding. The Board of Directors declares a 2-for-1 split on May 15, 2014 when the market value of the common stock was $2.50 per share. The retained earnings balance on May 15th was $700,000. Additional paid-in capital on this date was $20,000, and so we are to prepare stockholders' equity section of the company's balance sheet before and after the stock split. And then what journal entry would be necessary to record the stock split? So what you see in front of you is the stockholders' equity section before a stock split. So before the stock split, you can see that we had 500,000 shares that were authorized. That's the total amount of shares that the company is able to issue and share. And of that 500,000, 200,000 were still issued and outstanding. Keep in mind the fact that it says the 200,000 shares were both issued and still outstanding means that there is no treasury stock. And then we have a balance in the additional paid-in capital of $20,000. The balance in the additional paid-in capital came from when the stock was issued or sold for a dollar amount above the par value. So if we take our 200,000 shares times our $1 par value, we get the 200,000 plus the additional paid-in capital gives us total contributed capital of 220,000, and then we add in our retained earnings, where our retained earnings is the total amount of money the company has earned since the day it became a business, minus any losses or dividends that the company has paid out. So that then gives us a total stockholders' equity of $920,000. Let's now look at what the stockholders' equity section will look like after a stock split. After a stock split, 2-for-1 means that we have 500,000 shares authorized. That does not change in a stock split. What does change, though, is we now have 2-for-1. So instead of having 200 shares issued and outstanding, we now have 200,000, we now have 400,000 shares. So in a 2-for-1 stock split, it doubles. If it were a 3-for-1 stock split, it would triple, although in this scenario, we couldn't go over the 500,000 shares that are authorized. The additional paid-in capital does not change, but look at what happens to the par value. Previously, the par value was $1. So in a 2-for-1 stock split, not only does the number of shares issued and outstanding double, but the par value is cut in half. Now, if it was a 3-for-1 stock split, the par value would be cut into 1/3. So now we have 50 cents par value times 400 shares issued and outstanding is still 200,000. And our additional paid-in capital is still the same. So you can see that the net difference in the stockholders' equity does not change. What changes is the number of issues that are out there and the par value. So possible reasons to do a stock split is now when we pay out dividends, we'll be paying dividends on more shares. And it also brings down the market value of the shares when we do a stock split. So instead of having $2.50 per share, we would have a market value more like $1.25. So sometimes when market values get too high, businesses do a stock split, brings the market value back low, and more people are willing to buy. You'll notice it says that no entry is required. We do not have a journal entry to record a stock split. We simply have a memorandum entry that explains the purpose of the stock split.